And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Thursday, September 16, 2021. The NASDAQ continues to follow our current analysis pretty cleanly, in that I continue to leave this low that we reached on Tuesday as the completion point for a minor first wave. But I will add that the alternate would be that it's either minor wave 1 or a minor wave A. Either way, it is the completion point for one or the other. Right now, I'm counting that as minor 1. And so that leaves us in a minor wave 2 corrective phase, or a bounce higher. And we do now feel that wave A is complete and wave B today completed at the lows at 15,363. And then just really launched higher for the balance of the session, actually, in what I will label as the C wave. Now, it does look, I kind of can get this opened up a little bit without the market. There we go. That we still have a little bit more to go. Although the market did come up, it has put in a new high above 15,520. So the essence, it needed to get above 21, and it did. It got up to, I believe, 27. There you go. 32. It got out to 532. But it doesn't look quite complete. The first requirement, that wave C produces a new high above wave A, that's been done. But it looks like if I look at the internals, we might need one additional small rally. And that could take us up to this next resistance point at 571.75. That is where wave C would be equal to wave A. And that is the most common relationship between an A wave and a C wave. Does it need to do that? No, it actually doesn't. If I had to break this down and go all the way down, I probably could find 5 waves up to this level, and it did meet the requirement of producing a new high. But what's going to tell us that that is enough is that it would really need to start breaking down. And now I'll drop it down to a lower time frame so that we can hopefully get in there and see it. Let's try. Thank you. So, as you can see, the rally was pretty strong, and I'd have to keep going down. So that's why I think maybe this is just these were all like 1, 2, and 3. This is a small 4, and then we rally up into a 5. Whether that happens in Goldbex or whether that happens tomorrow, who knows? We have to wait and see. But it's not going to change my labeling. In fact, this could actually go up to 15,622. And still be considered a wave 2. As I have described previously, second waves can really retrace almost all of that first wave and not break any rules. The rule is that it cannot exceed the starting point for wave 1. And that sits all the way up at the high, at 15,709, we'd call it. That's where the high of all of our advancing sequences had completed, and this decline began. So it can get all the way back up there. It can equal it, but it can't exceed it. So we could continue to rally as strongly as we did today, as strongly as we did on Wednesday, coming off of that low at 15,307. The market just blasted out of that for the balance of the day, and then came down overnight. We finished that off during the beginning of the hours of our session, and then it lasted again. So the buyers remain just as strong as the sellers currently. And I think that will switch. Now, what we do have going on tomorrow is September expiration. And from what I understand, there is quite a bit of dollars or money sitting out there in various positions, options positions within, of course, all of the stocks within the NASDAQ and all of the stocks that are in the S&P. So we've got a big expiration for Apple, for Amazon, for PayPal, for Facebook, for Google, for Intel, for Microsoft, for all of our players here in these indexes. It does look like it will be quite exceptional. The original thought process that I've heard is that they're going to want to push the market higher. Well, that kind of fit what they were doing this afternoon. They were pushing pretty hard right up until the close, and then they started to bring it lower. And so we're going to have to wait and see if indeed this 15,520, 532, excuse me, did complete that wave two, or if we still have an additional leg up and they'll continue to push. Not unusual. Again, we've seen a lot of one-sided moves within an expiration cycle, within that expiration day as it unfolds. So we have to allow for it. And again, my advice is that we continue to trade what is in front of us. We can have expectations, we have resistance levels, we can build additional resistance levels, and then we have support levels should this thing turn around and start coming down. Now, the expectation would be that once this wave two is complete, then it's going to turn and start heading lower as it begins a third wave down. So again, within that third wave, there are going to be 5 waves. 1, 2, 1 down, 2 up, 3 down, 4 up, 5 down, with the high probability that within the third wave, it will extend in and of itself. So inside of 3, there will be another 5-wave structure. So it's going to take some time to get through all of that. But what I would be looking for, because this would be a third wave down, I'm looking for it to start to accelerate. That would be a common characteristic within the third wave. If it's a third wave and it's in an up position, I'm looking for acceleration to the upside. This one is in a down position, so I'm going to be looking for acceleration to the downside. And as we start to break below all of our support levels that we've held on the way up, then we will start to get confirmation. Initially, I would be looking on the hourly chart for a quick 5 waves down. If I can get that right in the beginning of it, that's going to be very telling and supportive of the wave 2 being done and the next C wave getting started. I would not anticipate that that C wave is going to resemble this first wave. It should not. It should be a clean, very clear 5-wave pattern down. And there should be strong declines. And again, the buyers will jump in at different levels and push again higher. So it should provide some very good trading, and it should provide a lot of opportunity for all levels. So opportunities for swing traders, opportunities for position traders, opportunity for day traders. It'll be a festival, and everybody should come out a winner. So for tomorrow, I am not real confident either way as to whether it'll be a slow, kind of just a chug along day and maybe very narrow ranges, or will it be fast and we'll run up and then we start to run down? We're going to have to play it as it happens. And of course, the market will let us know. But as long as that we are more mentally and prepared for either scenario, then our trading will be clean, and it should be very helpful in terms of knowing that it's going to be range bound. And a range bound market, you're going to be able to see that because it's going to be like in a box. You know, all the highs will be lined up in about the same area, all the lows will be lined up in about the same area. And yes, eventually the idea is that the market's going to break out of the box, and depending on where it is sitting in terms of the current structure, like if it's still trying to get up to that top, but it's forming a box, then I'm going to think that that's a wave 4, and that the breakout will be a wave 5 and it'll be up. Same thing coming down. If we're getting down low enough and we're just sitting in the range, and we've already reached our high, then I'm looking for it to break out to be down. So again, when you're trading and you're trading on the smaller time frame charts, the 1, the 2, the 5-minute charts, We're taking references off of your hourly chart and off of your daily chart. Those are important to check in with each day because during the day, because of their positions against the hourly 20, the hourly 50, the hourly 200. And then again, referring back out to the daily, because what we're looking for now is the development of weakness, but on the higher time frames. So when you're looking at a daily and it begins to show weakness, then that's going to be important to how we're going to trade our 5-minute chart and our hourly chart and our 30-minute chart. When the daily starts to show weakness, then we're looking for stronger breakdowns. Again, more of that as it starts to happen. For tomorrow, play it against your moving averages. Your moving averages will tell the story. The moving averages will help guide you from long to short or short to long. I'm going to leave it there. The next update will be on Sunday.